What's going on, everybody? We are live. Welcome back to another show. Right now, let's just start off by looking at the charts. We got Bitcoin is trading at 16,861 right now. Zoom in. It's been going up past 2 days. Question is if it's gonna continue to go down. Right now we're looks like a nice little bear flag over there to go down to that 11K zone. The question really is it going to hit that 11K or 10K or go lower? And I think that would be based on people like to base it on technicals, but obviously I'm not a believer in technical analysis. But it would be based on fundamentals. And there are a lot of companies out there that are, facing the prospect of insolvency, like Genesis, like potentially Coinbase people are talking about, and Digital Currency Group, things like that. And I guess based on whether they're, they have the backings that they say they have, and whether they have they've been doing some funny business with customer funds and, don't have the liquidity to withstand the bank run, I guess that will really determine how far we drop. I mean, because we are really around the bottom point. I think it's also going to depend on rate hikes, but I mean, the market is so oversold. The question really is how much more could the rate hikes affect it? Because I remember we kept on getting the news of 75 basis point rate hikes, and the stock market was dropping, but Bitcoin was pretty much staying at around that 19-20K zone. But then with the news of FTX, that's when it really went down like crazy. So not sure how much of an effect the rate hikes are going to have in terms of price depreciation. But I do think that high rate hikes will prevent, new all-time highs. I think that would be the better way to put it. So I think the bottom could be in, and maybe if rate hikes remain high through the period where the bull market would be scheduled to start, I think it could potentially prevent that from happening. But I guess there's no way of knowing. We're just going to have to wait and see. Then we got the Hex chart. Hex right now had a nice bounce. We're at 2.8 cents. Been doing well past 2 days. Is this going to be sustained is really the question. And again, I think Hex is to a large extent very tied to broader markets. So it would depend on that. It would depend on pulsechain launch, and it would depend on just, a lot of these big wallets. What are they going to do? Are they going to sell, or are they going to restake and things like that? Let's look at the Hex daily stats. Yesterday, we actually had a drop in current holders. So so it's been 9 days straight of a net increase in current holders, and after that long, you're gonna have a pullback, so to speak. So we got 97 less, but current stakers got 360 new current stakers, which is very big, and the total is now 115,318, which is all-time highs. So really sustained all-time highs in new current stakers, which is great. And then I guess the first thing I'd share would be on Twitter with at KDP Crypto. It's a great account. You can follow that after you followed my account, obviously. Please follow me on Twitter and like the video and subscribe. So the top five top 500 ETH whales are buying Hex. Not even the whales want to miss out on this. Entire crypto space is definitely watching. I think 2023 we go viral. I hope so. But it's quoting the Whale Stats account saying just in Hex and at Hex Crypto now on top 10 purchase tokens among the 500 biggest ETH whales in the last 24 hours. That is big. That is very big. Yeah, you want whale consensus. Whales really, that's really where the big price movements come from. It comes from whales buying it. Would want to know what they're doing with that Hex though. Are they staking it? It's a good question. So you really have to dig in deep to know that. But that is great news. How we doing here? Oh, we got RH Max in the chat. What is happening, Captain? What's going on? Maybe should I send you a link? Yeah, I guess I'll send you one. No pressure, though. No pressure, Max. But if you want to come on, just... Sweet. We got Mark Guvelli. What's going on? It's a great question. I'm going to get to that questions at the end. Leo Muscleman, good content. Subscribe, keep it up, man. Thank you. Thanks so much for watching. And guys, yeah, please like and subscribe. Could use all the help I could get. But let's go further in here. We got a nice little meme over here. Insider trading by members of Congress. Nothing. Sam Bankman-Fried getting away with billions in FTX. Ponzi scheme, nothing. And then your $600 Venmo transaction. They're looking pretty closely. It's true. We all know they're not playing by the same set of rules. It's really nothing new, but it's a nice little meme over here. Then we got how cryptocurrency works. So this is interesting. That's 69K right there. Yeah, that's pretty accurate. But what they didn't show is the next part is what I was thinking is that so that falls and then you have more people in the pile, so that's a bigger base, and then the next time people could go higher. So they didn't show that part, but definitely something to keep in mind. And then we got where were we? Oh, this is the first news from our guy Dirty Bubble Media. Please give him a follow and then give me a follow at furufinance, obviously. But this is some interesting news over here. We had Justin Bieber was getting paid to made millions from so these insiders made millions from Justin Bieber's NFT project. His fans are down 90%. Yeah, we all are down, but so it says here, remember the NFT craze a few months back, influencers and celebrities got in on the game in a big way, obtaining valuable NFTs and sharing them on social media. Of course, as we and others have shown, these promotional efforts are usually a sham. So it says in Bieber's case, it appears he was secretly a partner in the In-Betweeners NFT project, using his influence to convince fans to buy in. Bieber got $2.7 million in proceeds from his project, using the money to buy other NFTs. Sounds familiar. Big influencers using their platform to extract value. by giving them trinkets. So another beneficiary were the in-betweeners. So his name is John Shahidi. He's a manager for the Nelk Boys. So he pulled in roughly $1 million. Several million more flowed to others, including the artists of the project. For the project, Gian Piero. 2 million in Ether ended up flowing to Coinbase, possibly to be cashed out for real money. There you go. So then he collaborated with the Nelk Boys for a NFT project. So this is really where the dishonesty came. So Bieber, if this is true, what he is alleging is true, Bieber pretended to have bought one of these NFTs to shill the project. In reality, we show that Shahidi gave him the money to pretend to buy it. So yeah, influencers like Bieber played the NFT game using other people's money. They took no personal financial risks while creating hype that encouraged their fans to speculate on worthless digital trinkets. It fleeced the very people who admired and trusted them the most. So yeah, was this NFT craze just like a just kind of like a scheme for people with big audience to extract value from them by selling them, like what Richard says, something loosely, a JPEG loosely related to a server that may be hosted on the internet or something? Yeah, you could see them hyping it up. And there's just there was just so much money in ETH at the time that, you know, they were able to charge like extraordinary prices and people would just throw their money at it. But yeah, not good. Not good. Not good. Don't think that just because somebody's a celebrity, you could trust them. If this is true, that's a big shame. Then we got the Moon Carl. I'm deleting my Twitter in 30 days approximately, unless Bitcoin breaks up to 100,000 until then. I could also donate my Twitter to one of my followers. ? Comment below if you want to take over my $1 to $2 million Twitter, 1 to 2 million Twitter profile. Yeah, I don't know. That sounds just like I'm not buying this. I don't know. Are you guys buying it? You think he's really going to give up his Twitter? I don't think so. It seems like he just wants engagement so he could get more exposure from the algorithm. But I guess we'll see. I mean, he has said a lot of things. I'm pretty sure this isn't the first time he said he was deleting his Twitter. Yeah, right there. If Ethereum does not hit 30,000 by the end of the next year, I'll delete my Twitter. So got a pretty bad track record. And then he also showed Costa, which didn't turn out pretty good. So yeah. There we go. Then we got, this is the first big news. The apparent stabilization of Bitcoin's value. This is from the European Central Bank, everybody. So this is pretty big. The apparent stabilization of Bitcoin's value is likely to be an artificially induced last gasp before the crypto asset embarks on a road to irrelevance. The European Central Bank's blog looks at where Bitcoin stands amid widespread volatility in the crypto markets. Okay, let's check it out. Got it right over here. It's called Bitcoin's Last Stand. It's so funny, like you just see how sentiment really just changes, and everybody sentiment basically always trails price movement, and then price movement is always ahead of the sentiment. So it's kind of like a reinterpretation, you know, like people just create all these narratives. Price went up like crazy. Everybody's saying hyper Bitcoinization. We're going to have the world reserve currency is going to be in Bitcoin, which is underratedly like ridiculous, because Bitcoin would make a horrible currency. Like, who would want to spend something that goes up 1,000,000x in 10 years or whatever it is? Like, it would make a horrible currency. Like, people just don't understand currency. But that's just narratives that happen when people see something go up in value so quickly. So let me read this to you. Another one of the trailing narratives. The value of Bitcoin peaked at US $69,000 November 2021 before falling to 17,000 by mid-June 2022. Since then, the value has fluctuated around US dollar value for $20,000. So for Bitcoin proponents, the seeming stabilization signals a breather on the way to new heights. Bullish. More likely, however, it is an artificially induced last gasp before the road to relevance, and this was already foreseeable before FTX went bust and sent the Bitcoin price to well below $16,000. So Bitcoin is rarely used for legal transactions. That's the first claim they make. Bitcoin was created to overcome the existing monetary policy and financial system. In 2008, the pseudonymous Satoshi Nakamoto published the concept. Since then, Bitcoin has been marketed as a global decentralized digital currency. However, Bitcoin's conceptual design and technological shortcomings make it questionable as a means of payment. Real Bitcoin transactions are cumbersome, slow, and expensive. Bitcoin has never been used to any significant extent for real-world legal transactions. That is true. That is true. In the mid-2010s, the hope of Bitcoin's value would inevitably rise to ever new heights because to dominate the narrative. But Bitcoin's okay. So let me just react to this part where they're saying that it was never used for real transactions. But that's what they failed to really understand, is that it's precisely for that reason that the price has gone up like crazy. The way it works is, and Richard Hart did touch on this. So the way it works is, if something is a currency, if it's used as a medium of exchange, it has a high velocity. And for inflation to happen, you need an increase in the monetary supply. That's one of the factors, and then you need an increase in the velocity of money. If it turns over hands at a quicker rate, it's cheaper because that's indicative that it is easily available. And if it's easily available, it's likely to be less valuable. So the reason why Bitcoin was able to have all these insane run-ups, it's up 1,000,000%, 1,000,000x. It was up 1,000,000x at all-time highs or something, a couple million x, maybe 8,000,000x. I forget exactly what it was, but it was precisely because it made a poor currency, because people didn't want to spend it, because the transactions were slow and expensive, and it went up like crazy, which is why it would make a bad currency, because it went up like crazy, so people didn't want to spend it, and all those kind of things. And also, yeah. So I'm saying that's exactly why it went up in value. If it were used as a currency, it would not have this kind of price appreciation generally, because people would need to spend. I'm saying people would need to spend it to buy food and things like that. So it would just move around. I don't know, but perhaps because it's like so scarce. Yeah. So I guess you could say, technically speaking, if it were used as a currency, if like Klaus Schwab would declare Bitcoin is the world reserve currency, or Jerome Powell would say it's the world reserve currency, you have to pay for everything like that, then everyone would need to buy it, and then it would drive the price up like insane. But then it wouldn't be spent, and people would resort back to fiat currency. And if it would legally have to be spent, then I don't know. That's just not possible. It's not possible. It's not possible to be a currency, because if it were a currency and the price went up like crazy, no one would spend it, and then that would stagnate growth in the economy, and everyone's businesses would go on. I don't know. It's a complicated situation, but it would make a horrible currency, which is why Hex is so great, because it took what made Bitcoin so valuable, which was the fact that people buy it and don't sell it, and then it's like, we're gonna bake into it incentive to not sell it. We're going to program a monetary incentive, a trustless monetary incentive that makes people buy and not sell, and obviously makes the price go up. So it's really what Bitcoin, it's like basically what made Bitcoin great, just that much greater, because it's baked into the cake. It's in the program that people are going to buy it and not want to sell it. So yeah, let's go further. Sorry about the tangent. In the mid-2010s, the hope that Bitcoin's value would inevitably rise to ever new heights began to dominate the narrative, but Bitcoin is also not suitable as an investment. It doesn't generate cash flow like real estate, or dividends like equities. Cannot be productive productively or provide social benefits. So like commodities, like gold, the market valuation of Bitcoin is therefore based purely on speculation. That's true. But that doesn't mean it can't go up in value, because if people buy it and then they don't sell it, then it will go up in value inevitably. But actually, Hex does pay dividends. And I guess you could say it generates cash flow provided it maintains its values. Well, it doesn't pay dividends. It pays inflation, which is yield, which is trustless. So it does have that advantage. That's why Hex really has that product market fit, but just all the more better. Speculative bubbles rely on new money flowing in, correct? Bitcoin has also repeatedly benefited from waves of new investors, correct? The manipulations by individual exchanges or stablecoin providers. What's the evidence of that? That Bitcoin went up so much because of manipulation. What does that mean? I don't really understand what manipulation means. I mean, manipulation, I guess if you have a lot of money and you buy it, is that manipulation because the price goes up? Stablecoin providers during the waves are well documented, but less so the stabilizing factors after supposed bursting of the bubble in spring. Big Bitcoin investors have the strongest incentive to keep the euphoria going. At the end of 2020, isolated companies began to promote Bitcoin as corporate expense. Some venture capital firms are also still investing heavily despite the ongoing crypto winter. So isn't that bullish? So despite the ongoing crypto winter, VC investments in the crypto and blockchain industry totaled $17.9 billion as of mid-July. That's really the case for that it would come back. And then there's, okay, we don't have to read everything. It says there are 320 lobbyists, up from 115 in 2018. So that's in 2021. There's probably more now. Yeah, so then they're talking about the regulatory bottleneck. Yeah, obviously it's going to be slow to regulate. So it says the current regulation of cryptocurrencies is partly shaped by misconceptions, the belief that the space must be given to innovation at all costs stubbornly persists. Since Bitcoin is based on a new technology, DLT, blockchain, it would have a high transformation potential. Firstly, these technologies have so far created limited value for society, no matter how great expectations for the future. Secondly, the use of a promising technology is not a sufficient condition for an added value of the product based on it. That's not true, because if you want to use the blockchain technology, you have to buy the token. And obviously, right now, there's not adoption to the point where it's driving up the price like crazy. And it's always going to be, given the current fiat environment where they're printing more and more money every year, it's going to have an inflated value the same way real estate and stocks have an inflated value, so to speak, then in comparison to what it would be if like people weren't speculating on it, because people just have to speculate on things. That's just the way it works. People have to speculate on things to preserve their purchasing power, because in the current system, if you don't and you leave it in money, your money just dries up. It loses 2% of its value every single year. So there is a need for people to put their money into stocks, bonds, real estate, and now crypto. And there is a use case for crypto, like Ethereum. If you want to use the Ethereum blockchain, you need to own Ethereum, and it's proven itself useful already. Like you look at DeFi, that is an excellent innovation where there's borrowing and lending and things like that, which is a significant part of traditional finance, and it cuts out so much costs. It removes so many middlemen, and it's trustless. It's unbelievable. And there's obviously the potential for stocks to be listed on these decentralized exchanges. Imagine that. Imagine these stocks were on the blockchain, which they're probably going to be. They're probably going to be tokenized, and you could trade them trustlessly. That's a pretty unbelievable innovation. And if that goes well, then crypto's here to stay. And it's already been like, they're talking like this is the first bull run. That's another thing. Like, this is not the first rodeo. Bitcoin's been up 3 other times, and every time it goes down, you have the same exact sentiment. You have the same people saying that, oh yeah, it's never going to come back. It's unproven. There's no regulation. Everything like that. And then it always comes back. So that's not to say that every single crypto is going to come back. I think most of them aren't. But if you're in the right ones, you are going to do pretty well, in my opinion. Obviously, none of this is financial advice. But yeah, this is just like, it's just like run the drill. It's like prices down. All these banks and mainstream media outlets are go back to, oh yeah, it's never going to do well because the price is down, and then it comes back. It's kind of programmed in the code of Bitcoin also with the halving, right? So the amount of money hitting the market from the miners, so the inflation, it gets cut in half, which just generally sends a huge supply shock and drives the price up. I mean, things have been working like clockwork. That's what I'd say about that. When they talk about the unprecedented polluters consumes a lot of energy, that's true. There is proof of stake now, which solves that. And it's good for the tokenomics because you don't have miners dumping on you. It says 1 Bitcoin transaction consumes hardware comparable to the comparable to the hardware of 2 smartphones. Entire Bitcoin system generates as much e-waste as the entire Netherlands. This inefficiency of the system is not a flaw, but a feature. It is one of the peculiarities to guarantee the integrity of the completely decentralized system. Yeah, but yeah, that is really the argument for proof of stake. That's what Vitalik and Charles Hoskinson and Richard Hart obviously would tell you. They'd probably bring that up. So that could be a testament to Bitcoin won't stay around. And I'm not sure if it will or it won't. Or maybe it'll upgrade because it'll be forced to be innovative. But that's not a testament to cryptos going away and never coming back. I think it's quite the contrary. And then they say it's promoting Bitcoin bears a reputational risk for banks since Bitcoin appears to be neither suitable for payment system or form of investment. It should be treated as neither in regulatory terms and should not be legitimized. And this should not be legitimized. It doesn't mean it won't be legitimized. Similarly, financial industry should be wary of the long-term damage of promoting Bitcoin investments. Despite short-term profits, they could be, even without their skin in the game. Despite the short-term profit. They're not short-term, it's already been around for like over 10 years. And if you got in the beginning, you made life-changing wealth in a very short period of time. The negative impact on customer relations and the reputational damage of the industry could be enormous once Bitcoin investors will have made further losses. Yeah, nothing really new here. It's just kind of just running the drill of how it goes. And I think another thing is they really overcomplicate it. They really make it like they make it basically like it's like it has to have use case as an investment and be used as a medium of exchange in order to achieve legitimacy. But these things, and it just goes back to what Richard Hart just keeps saying, it's all really just memes. Like none of these things really matter. What really matters is that people buy it and don't sell it, right? That's all that really matters at the end of the day, that people buy it and don't sell it. And that's really what happened with Bitcoin. And, I think it will continue, at least in the short term. Whether or not Bitcoin survives over the long period of time is a different question. But then obviously, and you have in Hex, people buy it and, they're incentivized not to sell it. And if people just keep buying and not selling, then the price goes up. And then more people buy, and then the price goes up. That's really what it comes down to. That's really what gives something its value. Same thing really is applicable to stocks. Granted, they'll tell you that, it's backed by a company, and there is something to that because, the board is held accountable. They are legally, I mean, I don't know how much they abide by it, but they are legally obligated to do what's best for the shareholders. If that means, paying dividends, if they have excess cash, or they buy back their stock so the value goes up. I guess you could say that that provides a floor, but really at the end of the day, we are in a paradigm where the current financial system basically, they print, we're in a fiat system, and, there is inflation, on average 2% a year. Now it's been a lot higher, but basically if you don't put your money somewhere, you're going to lose value. So money has to go into things, and blockchain obviously has a use case. Cryptocurrency has a use case. And it is for that reason that the money will really, that the money will go to crypto. It will continue to go to crypto, in my opinion, especially if there's incentive programmed into the crypto. And the testament to that is that it came back so many times, and it just keeps on coming back. So nothing novel. I think if you just come into crypto, I think you'd be a little bit shaken by that. That could really prevent you from buying in. But once the price goes up like crazy, people disregard all the FUD. Everything pretty much goes, is obsolete to the fact that people are getting rich from it, and people just come in and they want to buy more. That's just really how it works. Yeah. So that's really my take on that. Let's go. What else do we have here? Oh, got from M Dudas. A single book, podcast, or conversation. This is from Pompliano. He said a single book, podcast, or conversation can change your life. Thank you, Pom. It's very useful information. Never thought of that. Better start reading books and listening to podcasts and having conversations with people. Then Wade AI responds, so true. For example, I lost most of my savings after listening to your podcast and putting it into BlockFi. Completely changed my life. Yeah. That's very sad. Maybe I shouldn't be laughing. He's probably joking, but who knows? At the end of the day, it did happen to people. They listened to influencers. They put their money into places where they told them to put their money. These people really do have a big influence on their following. And they listened, they did what they said, and they ended up getting wrecked. And that's really the problem. And what did they do it for? They did it for yield. So wouldn't it be good if there was maybe a cryptocurrency that allows you to earn yield trustlessly? That's really a testament to really the product market fit of Hex. That's what I'd say about that. That's why I'm very bullish on that. Then we have a Simon Dixon tweet. Simon Dixon, beware impersonators. Myself, Nayib Bukele, that's the president of El Salvador, and Bank to the Future team are cooking up a number of recovery plans in El Salvador for global distressed Bitcoin lending companies. Can be an amazing opportunity for all affected when you have the perfect leadership, laws, and Bitcoin. Hashtag depositors first. And yeah, they want to salvage these lending companies. These lending companies are completely irresponsible. They incentivize referral links. They do reckless things with people's money. And it's like, now we have to save them. It's like, how about we just try our best to get the user's money back, and we stop doing the same stupid thing over and over again? Like, could we cut this out? That's the problem. Like, Simon Dixon may have good intentions. He may really want what's best for people, but at the end of the day, I guess you could say he's an unintentional adversary to the crypto, in the sense that he keeps on going back to the same exact solutions, the same exact idea of giving your keys up to middlemen in order to earn yield. I mean, that's really what his company invests in. If you look at Bank to the Future, it's like, you can't, I guess you could say he worked in finance, and you can't teach an old dog new tricks. He just wants to bring about the same old legacy system that's been in place for years to a novel industry. And the whole entire point of crypto was to get rid of middlemen. And he is trying to do exactly the opposite. I mean, it really comes down to what Richard keeps on saying. It was meant to remove middlemen, and then people like Simon Dixon, their intentions may be noble, but they end up wrecking people. I mean, how about we just find a solution, again, of a cryptocurrency that can give people yield without the counterparty risk? without people that, take risks and get greedy and scam and all those things. I mean, that's what's really bothering me about Simon Dixon. It's like people got messed over by Celsius and BlockFi and Voyager and Luna and Three Arrows and all these institutions and things like that. And you have the solution, and then it's like people like Simon are coming there to funnel people back to the same problem that keeps on repeating itself. When you have a way to really end this harmful cycle, you have a way to cut off this negative feedback loop. And then people like Simon, they just keep on getting people into these same horrible situations. And he was an investor in Celsius, and he is an investor in Bitfinex, which is affiliated with Tether, which there's many issues there. It's like, why should we listen to him? It's nice maybe that he's trying to get people's money back, but it's not nice that he's trying to get people into the same horrible situation. I remember so Bank to the Future, once he got all the clout and he got all the respect of these Celsians, like he's trying to funnel them to Salt Lending, and then Salt Lending goes under. It's like unbelievable. It's just the same thing keeps happening. It's enough. Tired of listening to Simon Dixon. I want to hear more from people like Richard Hart that create trustless systems to solve these issues. That's really my take on that. Nothing personal to Simon. I think he means well, but he's got to be called out. He's got to be called out. That's really that's my opinion. It's my opinion on that. And yeah, if you look here, so you have, that's Simon's fund. It's Bank to the Future. They're invested in Kraken, Bitfinex, Bitstamp, Ripple. It's like just using a crypto not as intended and putting people at tremendous risk that they don't have to be subject to. The only thing that you really need in terms of a third party is really creating that bridge between the fiat currencies and crypto, that on-ramp. We have decentralized exchanges. I guess you might need, you need them to trade across chains, like decentralized exchanges. So for Ethereum, you could only trade ERC20s. I mean, I guess you could trade and bridge coins from other networks, but that already gets a little bit complicated. Maybe one day they'll be able to solve that. Excuse me. But for now, I guess it's needed. But to keep people's money on it for these custody services, that's not what crypto's meant for, man. We have the solution. It's meant to promote self-sovereignty and things like that. And that's just not what Bank to the Future is about. And I wanted to leave off on the Tether situation. I think that's really the big that's like I guess Tether's really the thing that people are waiting for to fall. I mean, everybody really is looking towards Tether to inevitably collapse, and people are saying it would happen sooner than later. And if it's true, if Tether is not backed, it would definitely be better if it happens now than it happens when crypto achieves more adoption. I think that could really be devastating. But what I wanted to share was an article by an article that by Revolver News. You could check it out. That actually covers. They do unbelievable investigative journalism. I mean, just top-notch investigative journalism. And they did an article covering why Tether may not be backed 1-to-1. And they do bring a pretty big case for why shady things are going on. So the reason why, what really got my attention is that Mr. Simon, our friend Simon Dixon, our friend Simon Middleman Dixon, Suck Middleman Dixon. I'm sorry. No, I like Simon. He's a good dude. He said he's invested in Tether in Bitfinex, which he was invested in Celsius, and we know he's invested in Bitfinex, which is an affiliate of Tether. And Revolver is saying that it could be FTX on steroids, which I think it could be. But I just highlighted some of the this is a very long article. I can't read the whole thing, but it says this is really the case that Tether is not backed one-to-one. It says USDT or Tether is what is known as a stablecoin. A stablecoin is a cryptocurrency that instead of fluctuating in value is intended to hold to a consistent price. Tether is a USD stablecoin. Each Tether is supposed to be equal in value to $1. While most cryptocurrencies are widely speculative and backed by essentially nothing, each Tether is supposed to be backed directly by US dollar or an extremely liquid or reliable investment like a US Treasury bond. But there is no evidence Tether actually works this way. We repeat, there is no proof that Tether stablecoins are backed by the store of tangible assets that is supposed to justify their value. It says, despite being first released 8 years ago, Tether has never been audited in any way. It first promised an audit in 2017 to, happen eventually. How's that coming along? As reported by the Wall Street Journal, Tether says audit is still months away as crypto market falters. So in 2017, they promised an audit, and 5 years later, there's still no audit, which is, very fishy. And you see the same thing with Coinbase, not the same thing as in there's a 5-year window, but Coinbase refuses to do an audit, and that's unacceptable in my opinion. Binance, did it. They did the proof of reserves thing. I'm saying it's something that they're very capable of doing, and they gave a little Twitter thread. I don't know. And then Grayscale also, they're saying security concerns. I don't know. That's very, very fishy. I mean, this is something that happens in crypto all the time where people get audits and they're fine. But I don't know. The company has been promising an audit since at least 2017. An audit is likely months away, says Paulo Ardonio, Chief Technology Officer of Tether Holdings, which issues the Tether coin that recently carried a market value of $68 billion. So he said things are going slower than ... we would like. Instead of a full audit, Tether, like other stable coins, publishes an attestation showing a snapshot of its reserves and liabilities signed off by its accounting firm. Audits are typically more thorough than other types of attestations. The attestations for some crypto companies sign off on the numbers provided by the company's management for a specific date and time without testing the transactions before or after that date. That process can make the reports more vulnerable to being used to paint an unduly rosy picture. So attestation is only at the current time where they take the snapshot. They're back one-to-one. For the amount of Tether outstanding, there's an equal amount of US dollars in their reserves or US dollar equivalent assets like treasury bonds, like short-term treasury notes, whatever, in their reserves. But here's why the attestation is very fishy, because it says in 2017, attestation of Tether was skewed by its sister company Bitfinex. So sister company Bitfinex, which Bank to the Past, is an investor. So it transferred $382 million to its bank account hours before the accountants checked the numbers. The Commodity Futures Trading Commission said last year. So that means that was when, Take a moment to register that. In 2017, when Tether's total market cap was still under $1 billion, it needed a last-minute transfer of $382 million just to slide its way through a non-audit attestation of its assets. This is ominously reminiscent of the accounting trick used by borrowers to obtain so-called liar loans in the run-up to the 2008 subprime mortgage. So the 2017 attestation incidentally led to the Commodity Futures Trading Commission fined them $41 million last year. Tether also paid $18.5 million fine to New York State to settle claims that it misrepresented its reserves. The settlement forced Tether and its associated Bitfinex exchange to cease operations in New York. Crucially, none of these fines have fully exposed how Tether works, or forced it to change its methods, or even compelled it to admit wrongdoing. Tether essentially made a political payoff, it seems, and moved on. And it says here, it's important to state that what is happening if Tether is not actually backed by the dollars that it claims. If Tether Limited is pumping out new Tethers without actually taking in the equal amount of USD, then it is essentially a private-run money printer. Yeah. So that's that. You can check out the entire article. We'll link it in the description. But my question really is, so like, does Simon know about this? And if so, why is he still an investor in Tether? And why should he be trusted to solve this issue of counterparty risk in Bitcoin? That's really the question. It's like, I don't know. What do you guys think? But yeah, so they're saying, so at the time, Tether only had 1 billion outstanding tokens, and 382 million had to be transferred from BitConnect in order for the snapshot, to get the green light from the accountants that they're back 1-to-1, right? Just for that short period of time, they had to transfer 382 million, which means, according to that means that they were fractionally reserved then, because that means they had a 1 billion minus 382 million, which is 618 million. Only 618 million tethers were actually backed by USDT, or by US dollars, or the equivalent in assets or whatever. And now Tether has 60 billion outstanding. So does that mean, so what is actually real and what's not? That's really the question. According to that ratio, that would mean that it's like it's fractionally reserved by 68%, if that's the case. But we don't know, because there's no audits. And yeah, I think that really needs to be solved. Does that mean it would end crypto? Well, I guess the good news is that Tether's not the only stable coin out there, right? It's a smaller percentage, and hopefully the other ones are backed. I think they say Paxos is very credible and USDC is very credible, but I don't know. I guess you got to do your own research. But that does mean that if let's say a lot of the US dollars that are used to buy, that are tradable, redeemable for Bitcoin, are actually not worth $1, then that could really lead to a serious cascade, and that could bring us probably below 11K. Does that mean that crypto's done? I don't think so. There's still a lot of money in there. There's really still like there would still be some sort of arbitrage. Let's say Tether would be able to redeem 60 cents on the dollar, so then its peg won't. It's not a peg. It would be pegged to maybe 60 cents. So that kind of thing, and then hopefully people would take that money that they used to redeem the unpegged Tether, if that's actually the case. It hasn't been confirmed or anything. It's definitely fishy. They could use that maybe to buy into more credible stable coins or trustless stable coins that are sustainable for the future. That's really what a healthy correction would be. You'd be getting this nonsense out of the system in order to have more honesty and integrity and forwardness, I guess, in the crypto markets. But yeah, that's it for the news today. And I guess we're going to go to your chats. I guess what I want to say is, please, before I read the chats, please hit the like button and subscribe. Putting work into this, and I'd appreciate if you could just hit the like, subscribe to the channel. You'll get notified of future live streams and videos that I post. And also, I just created an email list. I know there's always the risk of, getting thrown off platforms and things like that. And it would allow me to stay in touch with you, so not all this work is for nothing. So please just go to the description, put your email down, so I could have some access to you guys in that event or whatever. We could just stay in touch. I would really, really appreciate that. But yeah, please like, subscribe, and yeah, ask any of your questions. I'll go through it now. Okay. Oliver Moore question: is my EUSDC will my EUSDC be worth $1 on PUSDC? So the answer to that is no. And I actually did a video on that. You could look at Pulse stablecoins, but basically your USDC on Ethereum is redeemable for $1, meaning you could go to Circle and you could send your USDC and they'll send to your bank account $1 because it's supposed to be back 1-to-1. I hope it is. But your USDC on Ethereum, but what's copied over on pulsechain is not. It's not. It could be that USDC decides they'll double their reserves to back pulsechain stablecoins, but they wouldn't do that because they're not going to get the money from depositors. The depositors already have their copy, so it will not be worth 1 USDC. But that doesn't mean it's worth nothing. It will be traded on an exchange. It will be in liquidity pools with probably bridged over Ethereum stablecoins or stablecoins on pulsechain that are actually pegged and backed, or whatever it is, backed by something. And there will be a ratio. You're probably not going to, and it's also going to be in liquidity pools with other PRC20s and other tokens that are also tradable for $1. So that's really what gives it its value, is being tied in liquidity to other coins. But it'll likely be worth a lot less. And I guess it's theoretically possible to be worth more, but I don't think so. I think people would. I think people are really going to drain liquidity pools of copied over stable coins. But so we'll have some value, probably pennies on the dollar, fractions of pennies. I don't really know what it is, but I do advocate for holding at least some stable coins for Pulse. If you want to buy Pulse, this is not financial advice, of course, and do your own research. But if you want to buy Pulse when it launches, because if you missed the sacrifice, or you want to buy Pulse X because you missed the sacrifice, a lot of people are saying to hold liquid hex, and I'm actually not a fan of holding. You could hold some, but I'm a fan of buying hex. I buy hex regularly and stake it. But the thing is, if you're holding hex liquid in order to trade for pulsechain or PulseX, you are at risk of the volatility of the market. And for example, if you bought hex, when people thought pulsechain would originally be launching in May, you bought it for like 7, 8, 9, 10 cents. Now hex is at under 3, so you lost, over 75% of your purchasing power. It could be it goes up, might not go up to that level when pulsechain launches. I just don't know. So I think if you keep stable coins, you get the copied over stable coin, which will be redeemable for some amount of PulseX, probably not much in comparison to an actual dollar, but then you get to bridge in your stable coin and buy Pulse and PulseX also. So the thing about your stable coin is it maintains its purchasing power, provided it keeps its peg. So you're going to be able to whatever money that you want to delegate to buying Pulse and PulseX, it'll keep its value and it will retain its purchasing power because it's tied to $1. So that's not the case with Hex. Could be that Hex goes up between now and when pulsechain launches, and you'll have more value. That is possible, and I hope it happens, but I just don't know, and it hasn't been going well, and I don't know. I don't think it's a good idea to take like too much risk, because if let's say Hex drops another 50%, which is possible, then you're going to get that much less Pulse and PulseX. And I don't know. It's up to you. You have to do your own research. You have to figure out what risk you want to take and where you think the market's going to go, and based like that. But I do like to minimize risk, and that's the way I look at it. RH Max, what's happening, Captain? What's happening? Thanks for tuning in. Sent you the link if you want to join, but no pressure again. Good content. Subscribe. Keep it up, man. From Leo Musselman. Thank you, Leo. And please listen. Please subscribe and hit the like. And please follow me on Twitter. And please go to the link and just put your email down in the email list in the link in the description below if you are enjoying the content. Can you provide a link to the whales tweet? Cheers. Absolutely. Let me see. It's a screenshot, so I'm going to provide you the link to the screenshot. Then you could go to the handle of the screenshot, whatever. But yeah, you do want to follow Katie. Excellent account. All right. And please like and subscribe. XRP Isaac 589. Super chat. What's your PayPal? I guess we're gonna have to hold out on that for now because I'm not monetized. But I appreciate the comments anyway. And XRP Isaac 589. Like it's going to $589. No chance, buddy. No chance. I remember I bought into that XRP. People that don't know, basically there was this guy on these like message boards named Bearable Guy, and he was giving all these riddles. And then one of his riddles, people said that he said that the price of XRP is going to 589 within 2 years or something. And because he was right about a bunch of other things allegedly, which I don't know if it really is true or whatever, but it never ended up happening. And not only that, XRP didn't even make a new all-time high in the second bull market, which most cryptos actually don't. That's what people don't realize. Like most cryptos do not make it. So crypto is definitely risky, but you got to do your own research and figure out what's best. Obviously, I think Hex, Pulsechain, PulseX is the way to go, but you got to do your own research. But maybe one day it'll go to 589. Who knows? Hopefully Hex will hit 589 before that. Make me a mod. You know what, man? Should I make XRP Isaac 589 a mod? Yeah, I'd appreciate if you get rid of the XRP symbol. Maybe you could change it to Hex Isaac 589 with the Hex thing. But yeah, I'll make you a mod. Wait, did I just? How do I make a mod? I just star? Are you a mod? You gotta go to the. Let me see. Maybe I gotta. I'll make you a mod after if that didn't work. But okay. Triple the Mogul. XRP Isaac. Thanks, Triple the Mogul. Ted Cash. Furufinance has got to be the most exciting broadcaster in the Hex community nowadays. Thank you for your input. You're a precious asset to the evolution of the crypto world. Well, thank you. I really appreciate that. I really appreciate the kind words. Really means a lot to me. So thank you for that. Monica Mofit Meals. Morning, Monica. Thanks for tuning in. Hey, you trendsetters. What's up, trendsetters? What's up, Finn Bear? I like Finn Bear. And Finn Bear says, do you live next to whales only? Was there sirens or something? I'm not sure. Maybe you could elaborate, but whales only, he's awesome. And then guesses on T-share performance, ETH versus Pulse by Leo Musselmans. Good question. T-share performance, ETH versus Pulse. So in the beginning, it's the same because it's a system state, right? And then it's really based on more people buying and staking, because if there's more, the more people end stake, which means the more people stake, the higher the T-share rate goes up, I believe. So it really comes down to which one gets more adoption, Hex on Ethereum and Hex on Pulsechain. And my take is really that, at least in the beginning, Hex on Pulsechain, I believe, is going to have more adoption because it's faster. Pulsechain, it is cheaper. It is cheaper than Ethereum. It's faster than Ethereum, and it's Richard Hart's chain. But really, in the long run, it is going to have to come down to the performance of the blockchain over like 5, 10, 15 years. And I just can't tell you which chain is going to be better in 5, 10, 15 years. Different communities, both great founders, both very innovative. I really like them both. I believe that Pulsechain in the short term is obviously going to be better, not in terms of maybe activity, but in terms of using Hex on it for sure. And obviously it's going to be better in terms of like which one to use. You know, it's faster, cheaper, and all those things. So definitely in the beginning, I think the pulse chain T-share performance is going to be better. Could ETH be faster and cheaper? I mean, they're going to implement things. Things are going to change in the future. I don't know how they're going to change, but I do think their gas fees will get cheaper. I think they're very dedicated to lowering the gas fees, and they have sharding, you know, to solve that. I guess we're really just going to have to see how it plays out. But there is a possibility that ETH in 5, 10, 15 years could be the better chain. I would obviously go with pulse chain because I'm a Hexagon, but it doesn't matter. Either way, you win, because if you buy Hex now, then you get it on both chains. So I guess it's not financial advice, your own research. But I am definitely going for Ethereum. I want Ethereum to do well, because if Ethereum does well, then eHex, which I own, does well. And I want Pulse Chain to do well, because Pulse Chain, which I own, you know, Hex on Pulse Chain, which I will own, you know, when Pulse Chain does well, Hex on Pulse Chain will do well. But either way, it's good. I just can't tell you. I'm gonna go with Pulse Chain because it's Richard's project. But definitely, regardless of whether Ethereum or Pulse Chain is better in 5, 10, 15 years, I think both of them will have adoption. And not financial advice, as your registered, licensed, non-financial advisor, none of this is financial advice. But I would say, just based on, you know, the law of diminishing returns, and as assets mature, they become safer but also less profitable. I think that Pulse Chain is a better opportunity, in my opinion, not financial advice, than Ethereum. Like, because it's new. Does that mean? I think a lot of people make the mistake that, oh, just because something's new, it's going to do better. That's usually not the case, especially over 2 cycles. That's never the case. But when you compare an asset, and it's that withstands the test of time, like Bitcoin and Ethereum, they're newer. The price performance in its earlier years, in comparison to its later years, it's generally always better in its earlier years. And I think Pulse Chain, in my opinion, not financial advice, is going to have a similar price performance, if not better, than Ethereum. The tokenomics are certainly better. So I think, given that when Pulse Chain launches, you're going to have the opportunity to buy Pulse Chain in its newer years. And I believe that, you know, Pulse Chain is going to do well over a long period of time, although that is my opinion. So I think Pulse Chain is the better opportunity in terms of that. But in terms of eHex versus pHex, I don't know, because it is a system state fork. So it's going to be, you know, the T-shares in the beginning are going to be the same. I guess we'll just have to see. But the good news is it's down over 95%. Hex is down over 95%. And if you get it now, then you get both, which is awesome, which is why I see this as such an opportunity. But yeah, good question. Hope that was helpful. Billy Mack says, really good content. You and Ben are my favorites. Now both of you are easy to listen to. Yeah, Ben's awesome. Ben's also my favorite. So yeah, thank you for that. Really appreciate that. And if you haven't subscribed to Ben Dubar's channel, you should definitely subscribe. And if you haven't subscribed to my channel, you should definitely subscribe. You should definitely hit the like button. You should definitely go into the comment section and click the link to my email list and just put your email in, please. And I guess that's it. If there's no other comments, thank you so much for tuning in, and we'll be back possibly tomorrow. Stay tuned. Thank you.